up, motherfucker?
Hello, what's up? It's February. Okay, guys. Interesting day in the markets. So I've been spending my morning just building up this list of stocks I'm going to pick for you guys for long-term hold. So you guys who are waiting for a boomer selection, here we go. All right. Excellent. That's the banner at the bottom. You can see the whole list there. And we'll go over each individual stock and see why I picked them. And, it's to be determined. I might kick some of them off and replace them with something else. But again, UwU today has went up 7.5%. It looks like only 13 minutes to the close, 12 minutes to the close. And I told you guys, oil is the play this year. Oil is the play. And I'm going to give you some receipts, okay? I got some boomers that'll tell you this. And so most people are probably going like, what the hell, where should I go? Where should I go? Where should I put my money? Software still sucks. Well, all right, I'll tell you here. Okay, so, yeah, UwU, 7.48%. If you bought it when I told you to buy it Sunday evening when the Urban Landlord was still in ban mode, so on my channels. So remember, you have to subscribe to GetCrack to me and on both YouTube and Kick. So in case John gets permanently banned or some reason, who knows, YouTube is very, very, very anal right now. Anything could make you lose your channel at this point. So yeah, be sure to subscribe everywhere you can. So GetCrack to me on all Kick and YouTube, and I have a Twitter on the description in case like I get banned everywhere. Who knows? So whatever. So yeah, UwU, obvious. Let's look at the S&P. Okay, interesting day. Now most people would just go to CNBC and go like, well, hey, look, it's 0.1% today. Whatever, boring day. It is not a boring day. Because look at this red bar. This red bar happened right at the top. It opened above, so close to the most recent highs here, set back in January again, February again. So the past couple months right now, I don't think there was anything higher in December, right? Nope. So it was only January to February. So we're about 1.5 months into the new year. And guess what? You get another of these red bars at the open. This is bad. This means like nobody is confident to keep it, hold it. Right when you have a gap up, they sell off. Right when they have a gap up, they sell off. Right when they have a gap up, sell off. So who's buying this junk up here? Nobody, really. It's just probably dumb money, retail money that thinks like, hey, things are all right. I'll keep buying up here. Eventually, this will end badly. It'll be worse than the past 2 times we've had deep sell-offs, right? January here, February here, caused by weak earnings and other reasons, probably geopolitical noise. This is all noise. The truth will reveal itself. So that's why the title of the stream is A feather's weight will shift the scales, okay? All we need is somebody to put their feather on the bear's camp and it will all fall down. Or maybe they'll put the feather in the bull camp and it will all go back up. I don't know, right? But from what I'm seeing here is that like you've tried too many times to make new highs in the S&P and it's not happening. And the only reason it even got that high was because of who? Semiconductors. Once again, we've reached the top in semiconductors. So, the last time we had this event, we covered this blue region here, the cyan region. And once again, at the end of the day, we close at the top. So they're all hiding here. They all think like this is the safe place to hide out. Software is all crap. Communication services, mid. So they think like I still have to be in tech though, because I can't buy oil companies. They're boring. That's my guess. My guess is that they don't want to realize the truth. The truth is that this year is where everybody's going to oil. But these guys are stubborn. They want to stay here. They want to stay in tech. And the only safe tech has been semiconductor. So every time it drops, it goes back up. But you see the volume here right now? There's a lot of volume. A lot more volume than in many other days. So this bottom that was made Wednesday to Thursday has a lot more volume surrounding it than the bottom made in December 17th and November 21. If the feather drops on semiconductors to go back down, it's going to be a lot worse this time. So I've increased my projection down. So if this is going to be a bear event and semiconductors will deflate, the bubble in this area will deflate, I project probably 239 for SOXX, because that's really the major high we made back in March 2024. So everything that we've gained should be given up here, and all that money is going to go flow more into oil. They'll need a place to park their money, and that's good. So while this thing deflates, hopefully UwU can inflate. And I project about 100% from where I told you guys to buy it, which is 58% from where we are now, okay, for UwU. All right, and that's just the first leg up. The next leg up will be sometime towards the end of the year. I think this leg will go into summer, and then from summer you can sell some, right? Sell some and get all that. So that's how it's gonna be. That's how it's gonna be. Okay, and so now we're gonna play some boomer videos to prove the thesis that oil is the place to be. So I don't know, maybe this guy took some LSD and predicted all this. Let's see if he's gonna be right. Okay, so this is from the Foundation of Study Cycles, and the link is in the description.
Here's the secret gold sentiment indicator. There was the very bullish sentiment back here at the...
Oh, actually, no. The oil will be... I'll discuss that one in the next one. Let me cover this one first, though. This one's more important. So if you wanted to know where oil, like gold, was going to end its move, like, listen to this. Listen to this.
Now, here's the secret gold sentiment indicator. There was the very bullish sentiment back here at the 2011 high. And this is a Grandmaster formula that I got off of the Great Pyramid at Cheops during the the spring equinox, during an eclipse, while listening to Led Zeppelin records played sideways. And you see it coming to a top here. So what is this? It is the UGL divided by the GLD. The UGL is the multiplier, the leveraged gold index. For every 1% gold goes up, UGL goes up 2%. The GLD is for the less adventuresome. It goes up 1%. It moves with gold. 1% for every 1% move in gold. So let's buy some gold. Okay, we're buying gold in here. Well, we have to buy gold, but I'm not that optimistic on it. So we're going to buy the GLD. So the ratio falls and falls and falls, finally hits a low. Well, maybe we've been a bit too conservative. Maybe we should buy the UGL and get some leverage on our gold trade, and you can see what's happening. So we're approaching the red line here. So I don't think gold can go up much more. I don't have a specific number count, since my number counts have been blown away. My last one was 45.50. So that is the gold sentiment measure, and you can do this with any ETFs. Divide the leveraged by the unleveraged. They're good sentiment indicators.
All right, so let's go back here. Okay, and yeah, you're welcome Ugg on YouTube. You're welcome for, yes, I do this all for you guys. This is charity work. Too early to bet against AI. It depends on what kind of AI. You know what you're talking about. Like, I think it's way overblown on the software side. So the people shorting the software service, um, software as a service sector is too much, too bearish. So you're gonna see pops on them in the coming weeks. So once each of them do earnings, they're gonna have sympathy buys. You know, as far as semiconductors, they can still keep going up because Nvidia won't report for another 2 weeks. It's still a lot of time. So yeah, if you're all in on Nvidia, you better be careful because once Nvidia reports, it's going to be lights out. So you probably should be thinking of selling any semiconductors related to Nvidia. And as for like memory, like Micron reports last every earnings season. They report really late. So you got a whole month before Micron reports. So if people still want to hide out, they still want to hide in semiconductors, they still can. So when I did my short of semiconductors last week, it was like, okay, let's see how far we can go. And it was just day trade. I wasn't confident that it will break it in one go. It's going to take some time before people really just say, all right, I'm done here. I got to get out. Because today we had very good earnings on VST, or is it VST or something like that? Oh man, let me check. I don't think it's VST. It can't be this one. No. It has to be VRT. I always get them confused. But anyway, yeah, look at that, 24%. So this infrastructure company, which does a lot of work in AI, popped very nicely. Their projections are very good. So this calmed the bulls in semiconductors. They're like, whew, thank God. But you know what? That means good for energy anyway. So it doesn't matter if energy is, not quote unquote AI. You still need more resources, right? You still need more metals. You'll still need more energy. All the construction that has to go into AI. So like Caterpillar, so like boomer stocks like that, you need to build things up. People are going to rent more equipment, buy more construction equipment. Those things will also go up. So it's still AI, kind of, right? But it's not the AI you guys want. It's not the sexy AI, right? The sexy AI is more towards software, which is very unsexy right now because, as you can see, IGV ETF is still in bear territory. Today it went down 2.66%. So earnings have really cooked it. We have cooked. So companies like Upstart, like FinTech, and all this stuff, who are supposedly going to use AI to lay off more workers, and so their companies will be more profitable, it isn't happening. We also have one of these smaller semiconductor companies also not doing well. So it's not really AI related, but they get the hype too. So this is down 21%. We also have Robinhood, so people aren't trading as much. Okay, I guess they really don't know how to trade, so they're failing. I mean, we're going to talk about some other ones like Marriott, maybe sometime later this week, hotels, but let's look at Spotify. Spotify did do well in the morning, but gave up a lot of their things. So, but it's still holding. So Spotify, which had earnings 2 days ago, Datadog also 2 days ago did okay, but that's not enough to stop the bleed everywhere else. Let's see, anything that we'll see. Cisco reports today. Looks like nothing's happening. 1 minute after like the market close. We have to look at ALB too. So that's lithium. APP, didn't it? Okay, it'll have earnings. Okay, yeah, we'll have to look at this one. GFS is another semiconductor company, but it's a pretty trash one, honestly. This is an ugly looking chart. I wouldn't be putting money in here. Doesn't matter. I think it will just stay range bound and lose everything. Okay, another software company, Unity Software, down 26%. So yeah, these things are not doing well. Not doing well at all. Shopify, retail, nope. It popped in the morning, but gave it all up. Okay, so that's about it, I think. We got Fastly, another retailer. kind of like it's kind of like an eBay, right? I don't know. I never used them. Is it Quantum Scope, battery, blah blah. NBIS will be Thursday, so that this one might be AI related. But after that, nothing much. ANET after Cisco, watch that one on Thursday. Then after that, we gotta look at Moderna and uranium. Okay, so Moderna definitely had some news today. I think it was like FDA did not approve of its flu vaccine, but it has earnings Friday's morning. So I'm curious to see if this bounces. It landed perfectly at this level of 36. So this could be a buy. So Moderna could be a buy into Friday. But I'll wait after Friday morning to buy it. I'm not in a hurry. Advanced Auto Parts has Friday earnings too, but it was up 5% today for some reason. So usually I don't go for this one. Like O'Reilly is the one I usually go to, and AutoZone. So I'm not sure what's making this one juice up. So maybe something I should watch. And Enbridge, so natural gas pipelines, ENB. I think this one's on the list, on my main list here that's scrolling beneath here. You need to build things up to tear things down. Yep. AI is definitely something new. Oh, and the winner, chicken dinner. This small cap pipeline, gas pipeline servicing company had perfect earnings, up 33% yesterday, continued today 10%, right up to this resistance level 14. Watch this one. So this is probably one of a couple of small cap stocks I put in the portfolio, because if you can get it back at 10 before it returns up to 14 and tries for 20 again, after it breaks out this whole area, this thing is going to shoot to the moon. Okay? So ESOA could be the stock to get for anybody here that's really into high risk small caps. So one of the high risk small caps I recommended in 2024 was TMC. And this was like over the summer, right? So it was hanging around $1, and then towards the end of the year, people would start selling off, probably for tax reasons. They're like, oh, I lost money on this stock, I'm going to sell it for a loss, get my take a loss for the tax return purposes. And then once January hit, we started moving up, and then Trump said some things, and new board members were put it into the board of directors, and then we kept going up all the way to July of 2025, and that's when we got stuck here at 8. And then we kind of zigzag, right? Got a little bit above 8, give a little above 8, we go back down. So, ESOA could be ready to finish this range and continue up, and this could be another 10 bagger. So it was already a 10 bagger back in 2023 into 2024. This could be a 10 bagger once we get past 20. We go from $8 to $80. Why not? How do you figure out macro market trends such as large shifts from one sector? I just look at the charts. That's it. You look at the relative strength. So let's say you look at XOP, right? So XOP is the energy ETF, right? Let's look at absolute price. Absolute price says that I need to break 145 to see any upward move. We've tried that many times before. We tried that in 2022, we failed. We tried that in late 2022, we failed. We tried that in 2023, we failed. 2024, we failed, right? A couple times in January, December 2024 into 2025, we failed. And then we crashed with everyone else during the tariff tantrum. So what is the shift in trend? I know which one's the leader. The leader is semiconductors. Okay, let's look at the leader. And then let's look at oil again and divide it by semiconductors. So I take XOP divided by SOXX. Oil underperforms semiconductors. Duh, right? But what we're looking for is a change in this. We got to see a change in this. It could be that we get stuck here and never go up, but I doubt it, because I think oil itself is going to rise to $70 a barrel pretty soon. So when that happens, watch this. Okay, watch this one. You'll start seeing a shift, right? The most money is in semiconductors. The least money is in here. So this is a trend, right? That's a trend. Okay. Pretty simple. Once we break this trend, then we know we're ready to rock. We're ready to rock. And that's how we know that we can continue holding UwU through the year. Okay? So that's how you do it. All right. Now, going back to the gold stuff here. So he said UGL, which is leverage gold. Okay, so this is leverage gold. All right, there's also the AGQ, which is leverage silver. We can discuss that too. So this one is for the psychos who want to risk it all and make more money or lose more money, depending on where you enter and exit. So if you look at UGL divided by GLD, so normal gold ETF, so not leveraged, right? So we're doing another ratio here. Okay. Now he also said to start looking at, the long-term trend. So I'm going to go monthly chart. Look at that. So the last time we had a peak of UGL over GLD, leverage over non-leverage, is here, 2011. And guess what? When we peaked out over it, that's when you had your silver crash, right? So this was when everyone was too damn bullish. So what this tells you is that, whoa, you are too optimistic now, because now you're reaching the same level of optimism as 2011, which was when we had the peak in silver and gold and all that for that time. Okay. Now, does it mean it'll just go red and drop right away? No, it doesn't. It just means that at least for now, we are stuck. Okay, because this is a hard thing to break. We may break it later, so stay tuned. Maybe towards the end of the year, we'll have to take many months to sort this out, but we've had a major top, so don't be too much in a rush, to get back into silver and gold right now, because you can wait. I think so. Now let's look at silver versus AGQ, right? Over SLV. So let's look at the silver one. So yeah, we haven't reached the bullishness of silver in 2011 yet. But this was quite a move, though. This definitely was quite a move. A larger move than what happened during COVID. Okay, so we're a lot more optimistic now than we were in COVID, but still not as optimistic in silver as we were in 2011. So that's a good sign. That means, yeah, silver might have a lot more to run so long as we hold it together, okay? As long as we can hold above $80 a troy ounce. Okay, so let's look at this one. I have SOXL. So I said SOXL last year was the best one, right? The best thing to be in. Okay, we're near at the top here. So let's look at SOXL divided by SOXX. So in terms of optimism, yeah, we're about the same level of optimism in semiconductors as we were in January 2018 before the crash later that year. We were also as more optimistic, in 2019 before COVID wiped everyone out before recovering. We're also seeing a lot more optimism during the 2021 bubble when the Feds kept printing out money. So that was the peak optimism. And then we had a minor optimism back in July before the yen carry trade unwind. So all these optimistic moves have happened before significant crashes. Now we're back here. So watch this ratio then. SOXL divided by SOXX. If this thing rolls over, so let's say it just gets a little bit more juiced up into NVIDIA, and then NVIDIA earnings comes out, and then it's like, what? And then Micron earnings comes out, and Broadcom and whoever else is left over to report earnings, and this thing just rolls over, then you gotta run. You gotta run. Okay? So keep that in mind. All right. So that's why I wanted to bring up that boomer take there, because I think it's important before we get back into oil. Now, how about let's look at UwU? Or actually, there's not much history in UwU. I have to use a different ETF. Gush is 2x leverage. So Gush divided by XOP. How about that? Let's see. I think there was a problem. It was like the COVID crash killed this ETF. So this is not a good one to use then either. Oh, that sucks. Yeah, I can't use this as a sentiment then. Okay, let me see. Let me see if there's a leveraged oil. I know there's one. I think it's called UCO or something. ProShares Ultra. Yeah. Let me see if this one got screwed up by COVID. Okay, and then I can use SCO, right? SCO is the normal one. Okay. All right. So I think this is okay to use. So UCO leverage over SCO. So we're right here right now, going sideways. So I don't think there's any issue so far. So we have peak pessimism into peak optimism right here, 2022, and then we flattened out. So I think we're okay. So we're not overly optimistic on oil, definitely not. So I think we're fine. Okay. All right, that's good. So now let's done with that, and let me give you this. Okay, so I'm going to go over some charts for you. All right. Okay, good. Let me load it up. And then, okay, so this is the boomer chart here. And this is from Jake Bernstein. All right, Jake Bernstein. So if you know Jake Bernstein, he's like one of those King Kong commodities traders. He got slapped by the SEC. He was banned from trading for some years. And you know, Bernstein, right? So you know he knows what he's talking about. Come on. Anyway. Since you're a chart-oriented guy, can you this is okay? So the thing is, most people when they learn chart stuff, they learn stupid things like candlesticks. It's like those. Yeah, you should know them, but it's a waste of time because I don't use them for trading per se. Like everything I've done is, I've taken stuff from multiple people. Key ideas, you know, and then combine them together into one thing. Learning the basics really is not going to help you much. It's really just going to waste your time. So most of the things I discussed last year when I did all those series was so that you can see what I'm doing. And when we get to the Substack, I'll start writing little articles, you know, and the blogs, and then so over time you'll understand step by step what I'm showing you, and then you'll absorb the knowledge that way. I think it's better than going like, okay, what's this? Identify this. That it's all clouds, you know. You're just looking at clouds, essentially. That's why nobody likes technical analysis, because they think it's all about like looking for patterns, which are nonsense anyway. It's just male astrology, a lot of it, because here it's like this has nothing to do with a book, you know, and these things have nothing to do with books. Otherwise, we just go like, okay, what's this? I see a double top. I see a triple valley. I see a descending wedge. I see this, blah 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 blah. I don't talk about that stuff. That's nonsense. Okay. So what this chart is showing you is that he's showing you cycles. Okay. And we are at a bottom. We should have bottomed last summer, which is what I told you, know, that bottom was supposed to be last summer. And the red part here, this red, I don't know what you're going to call it, a line chart or a histogram, or it's not really a histogram. It's just it just shows you how much the market is hedging. Okay, so when you look at the futures market, and we talked quite a bit about futures market, why is it used last year? Yeah, Yep. So last year, and we talked a lot about like what they use the futures for. Real people who actually grow food, you know, or actually drill for oil, they're not using it to gamble. Okay, most the retail people go in there, they're there to trade. But the actual people who use the futures market, they're using it to hedge. So if I'm drilling oil and I want to pay for equipment to drill oil, I am going to go to the futures market and buy and short some futures, because just in case oil prices go down, I'm protected and I can still buy and I can still pay my loans for the oil equipment that I bought. So all the drilling equipment, any kind of extraction equipment, right? Delivery equipment, whatever. I don't know. I'm not an oil guy, but I'm guessing that's what it is, an actual business. And futures are used just as like options. Derivatives market are used as insurance. So the red part means that they're buying less and less of this insurance. The only reason you would do that is because you're thinking oil prices are going to go up. The probability of it going to go up is a lot higher than going down. So if I buy insurance and the price of the oil, okay, is actually going up, I'm going to lose money on my insurance, right? So I'm buying insurance to protect me, okay? I'm going to eat a cost. Obviously, you know, sometimes oil will go up against me, okay? Like here. This was like during COVID. It was the same amount of insurance buying as was like during the past almost. So there was no decrease there. So even as oil was going up, oil companies were still buying insurance at the same level. But now we see a lot less, even during the lockdown times of COVID. They're less pessimistic now than they were during COVID. So guess what? Oil is probably going to shoot to the goddamn moon, because the only reason you would do this is that you are really damn sure that it's going to go higher. And not only that, the price of it going higher is probably a lot higher than anyone's really guessing. Okay, the bottom one is just sentiment. I mean, overbought, oversold. So when it goes below the green line, oversold. Obviously, it was during COVID, oversold. We hit like red when we hit the peak, when after COVID lockdowns were over and people are coming back and oil starts spiking again. But overall, we're still in the middle. So we're not overbought or oversold. We're neither. Okay. Now, okay, let me take down the banner so you can read the dates here. Okay, you got the date so you can take a screenshot. Now, let's look at this. So this is monthly chart with the DeMark indicators. Now, you see this green, two green lines at the bottom? These were the targets. These were the targets set by the DeMark indicators, okay? DeMark indicators have no clue that there's going to be COVID-19. They have no clue of anything that's going to happen. They have no clue. But look at this. Look at this. Look at the initial bottom that it set. The initial target was around $10 a barrel. And from 2014 to 2016, during the Euro crisis, I think this was during the Eurozone crisis. There was definitely some financial crisis, some Asian issues too during that time. And you see oil drop from $100 down to $20 a barrel. So pretty good, right? Pretty good targets. Now, how does DeMark even figure out all this crap? Like, all these counts, all these targets, everything he came up with were based on fractals. And we had a secret stream meaning that I only streamed on the Give Crack to Me channels, like on Kick and YouTube, not on the Urban Landlord. So on those two channels, I talked about fractals. So based on patterns of behavior, patterns of the market, patterns of everything, he devised methods to come up with these targets. Now look at the second target. The second target was actually around -50 or some crap, right? So -$44.20. Now, who in their right mind would suggest that oil could go down negative. But we did go negative during COVID. We did have people trying to get out of oil because they were stuck with a bunch of barrels on ships that they couldn't offload because everything was shut down. So they were desperate to get out of oil, and they would actually pay people to take away their oil that which they couldn't store. And we actually dropped down to $30, negative $30 a barrel. It's wild to me, you know? It's wild that people out there spent all their time. You know, DeMark is like Rain Man. So Tom DeMark, if you want, you can look him up. He really is insane. Like, the guy spent all that time looking at charts, looking at Fibonacci numbers, golden ratios, this and that. And he discovered these things. And these things really work out pretty nicely, I find. But the problem is that you have to really understand how he does it, you know? And it takes a lot of time, a lot of effort. But I think once you learn it, you have a very distinct edge, because not many people are willing to spend the time learning it. There are people who do, and those people will never teach you how to use it. Okay? You have to learn it yourself, because they know if they start teaching everyone how to use this thing, then it's just too easy. Most people only know the basics. They know about the 9 count. They might know the 13 sequential. But after that, they don't know much more. Like, all this other extra stuff is not well known or taught anywhere. And DeMark trademarks everything. So he starts like slapping you with lawsuits if you start using it and telling people how to use this stuff for free. He wants a cut of it. So this is what it is, man. Anyhow, we got this thing here. We have a new target, $180 a barrel, right? This was set after COVID, and it's still there. This target still exists up till now in 2026. So are we going to go from $60 a barrel, $55 a barrel, $70 a barrel to up to $180? That's a triple move. This is crazy. That's a crazy move. And who would see it? Who would really see it? Not many. So keep that in mind. All right. Now, I do the same thing for XOP. XOP being the non-leveraged version of your UwU. So the XOP target is 257. So almost 80% for XOP. So that means, like, if we do the triple, we should get 3 times that, right? Or more even, because if it goes in a straight line, it should be more than triple this. So you can get a triple this move, right? So 3 times 80, let's say about 250%, right? Let's do that. How about that? I think, or something like that. Yeah, 250. Okay, if my math is right. And how about this XLE? XLE is a more broad ETF, so it's not only just oil and gas. It has a lot of other energy components. So it's going from 50 to 76. So we got a 50% move for XLE, and we have an 80% something move for XOP. So either way, I see good things for oil. I see good things for energy, right? These are the targets, all right, that we have. And based off of this, with Jake Bernstein, and we see less hedging in the futures market for the big traders. This is the big traders now. These ain't the little guys, okay? These are big boys. Essentially, companies and large firms trading are doing this, not your one-off person that goes on and day trades one futures contract, right? One futures contract is how many barrels? And yeah, if you guys trade futures, be careful, because if you actually wait until settlement for futures, somebody's gonna call you up and say like, "Hey, bro, we're gonna deliver you 10 barrels of oil or 100 barrels of oil. Where do you want them delivered, and when do you want them delivered?" And you're gonna be in trouble. Because I don't think people have enough garage space to store like barrels of oil, okay? And you can't store it properly, then they're definitely not going to give it to you. I don't think you can go to Home Depot and buy a bunch of buckets, plastic buckets, and say like, yeah, I can store my oil in that thing. Yeah, good luck. All right. So be careful with futures, please. That's not something to be trifled with if you don't know what you're doing. Yeah, anyhow. All right, that's good enough here. Okay, and here's another thing to talk about. because I've already talked about this before. There would have to be a prolonged war. Could be, could be, could be, and that's probably what will happen because human nature is very repeatable. Everybody's in a cycle. There's a war cycle, 100 years, 80 years to 100 years war cycle. So, yeah, so could be happening. Gold's message for crude oil. Okay, so this is an old article. I already mentioned this a year ago. Basically, when gold up 19.8 months forward, you can predict the price of oil. Okay, so let's get back to the chart and let me bring that up. And then once we get that, I'll show you that and I'll play another video for you guys. Okay. Okay. All right. Here we go. Okay, so I did the homework for you. So I shift out gold. Gold's here. And here's oil. Now, the initial up move should have been during 2024. We only went sideways. We kind of went up into the New Year's of 2025, and then we just gave it all up. So no go. There was no go there. Now, here, right, into 2025, you see, like, we're supposed to go sideways up until November. All right. So from here to here, November 2025. So from January 2025 to November, we went sideways. We kind of roughly went sideways, but mostly still down, right? But now we've been creeping up. We've been creeping up since November. And December, January have been good months for oil so far. Okay, so can this continue? Because the real move up is going to start later in 2026, going into 2027. And then you see we could be going into 2028 with a big push up. Right? There you go. So this is where you're going to be. This is where you're going to be. So somewhere along the river, we are starting to go up late 2026 into 2027 and possibly 2028. This thing will go up. Now, we still need to wait for what gold says. Gold is still going sideways, right? So if gold holds, then we should be nice. But if gold pops, then I guess something's up because gold leads. And there's another thing to notice. Okay, a lot of people always say like, well, we have inflation. Why isn't gold going up at this time? So during COVID-19, inflation was going up, okay, in 2021, but gold was not going up. Why? Because most of the people that bought gold for 2021 bought it in 2022. There was nobody left to buy. Okay, so everybody hiding out in gold already bought it at the low during the March-April move, and nobody else was interested at that point. They were buying, but they weren't buying to the quantities that we see now. Now we see a lot more buying, right? We see a lot more of that buying, and that means that this is a predictor of the future. So if this is a predictor of oil, it also means it's a predictor of something else. I'm guessing there's going to be either inflation or war, because why would you buy that much gold ahead of time? So it's most likely we will go sideways because everyone who wanted to buy gold already was in gold in 2024 through 2025. I told a lot of people to buy gold and silver during the 2024 season because I was like, well, structurally, it should start going up sometime in the next several years. But, you know, at that time, people were like, that's boring. Buy Bitcoin. So nobody listened to me then. So whatever. All right. Anything else? No, we're done. We're done here, I think. Okay. Let's play another video.
In this area right here, this is the demand that was coming in. Then obviously the test, another confirmation here. So there were quite a lot of like areas where you could have like bought this position and so on and so forth. Well, until I'd say orderly move up with higher highs and higher lows.
Yeah, once we see this, Roman, right? You have the test here. Just start taking all the no supply bars.
And that's what we did in training until today, right? So we were looking for this bar.
And then because this is holding, right? And then look at the volatility, look at the spreads, how they diminishing, the down spreads, and selling is diminishing. Right?
This is an analog to this.
Same idea. The 3 bars down. Yeah.
The higher level, like in the middle.
Yeah, and look at this change here. The same concept, right? Look at this, and then increase in effort right here, and higher low, right? So here you're increasing the volume, the selling, and then why we print a higher low? So yeah, demand.
This bar confirms it on the ease.
Yeah.
All right, so those are the Wyckoff guys. So once you get to the advanced level of chart reading, you are going to be at that point. Okay, so we have to get there. Yo, what's up, 12th man? What's up? And this is where the things have to be. You know, you're gonna have to learn the basics first. So I think the first thing is to learn the philosophy of things. So this was the picture I had for my thumbnail. You know, you have bulls on one side, bears on the other. What you should really think about is that, like, you have buyers and you have sellers. And when you are at a point where they are in agreement, everything is equal and you start going sideways. Okay. And at one point, something will happen. Something will shift the attitudes of both sides. And they will have what is called a feathers drop on it. Okay. So let me try to get this quote. I gotta go find this quote. And I'll read it to you while you stare at this picture. Okay. Okay, this is from an old book. Okay, an old book, but it's repeated in David Weiss's book, Trades About to Happen. I talked about that book in a couple of streams already, and I don't recommend you read that book per se because it's pretty dry. You're probably going to get bored. The only thing that's important was that you understand that there is something called effort you put into something and the result that happens afterwards. So there's effort and result. Okay, so let me find the quote. Okay, here we are. So let me read to you the quote. You need a secretary. Yeah, I mean, I need someone to do work, right? This is bitch work, man. This is like a lot of work to do this stuff. You got to start your own company at that point. Yeah, it's a lot of things, and I'm really lazy about keeping schedules for this and that, so it's tough, you know. But I'm going to try. The first step is making the Boomer ETF. So for you guys, so that's the first step, and then from there we will move forward and start making these things work out. Okay, let's find this here. The quote. So this is from Wyckoff, all right, and he used a nom de plume. All right, he used a nom de plume. It was not Wyckoff. I think it was called Rollo tape. Okay, I think that's his book. Richard D. Wyckoff. So if you want to read that book, you can. So yeah, so his nom de plume was Rollo tape. His real name was Richard D. Wyckoff, which is where I get all this Wyckoff stuff from. All right, so that's it. And this is from his book called Studies in Tape Reading, page 95, apparently. I don't know which edition. Successful tape reading is a study of force. It requires ability to judge which side has the greater pulling power, and one must have the courage to go with that side. There are critical points which occur in each swing, just as in the life of a business or individual. At these junctures, it seems as though a feather's weight on either side would determine the immediate trend. Anyone who can spot these points has much to win and little to lose. Okay. Hopefully you got that. Now, you saw the bears and the bulls with that feather, right? And I've talked about it in the charts itself. There are times when we are going sideways. There's equilibrium. Right now, there's equilibrium, right, in a lot of places. Okay, let's look at one such chart. Let's look at ExxonMobil. ExxonMobil here with the monthly chart. Look at it. Look at this thing, right? Do you see something here? Do you see something? It looks like a equilibrium to me. What does that look like? It looks like everyone's in agreement. ExxonMobil is perfectly priced around $115 a share. And it's been like that since 2022, November. But recently, after earnings, or even just before earnings, we broke out. So a feather's weight has now been put on the bull side. And so every time you see something like this, where you have a range, it's also known as a cause. It's time to watch carefully, because once we know which side has won, it's going to fly up very fast. And for a boring boomer stock like Exxon, going up 17.5% in January, and so far in February, 10%, that's a lot. That's a lot of movement for such a boring stock. So we look for these. These are the things we look for. You want to see something like this. You want to see a range. Now, if you look back at semiconductors, right, we have a trend. We don't have a range. But if we zoom in, we look at the lower time frames. We look at the 78-minute. You look at the hourly. Are we building a range here? Are we building one? That's what we're looking for. We have to see if this thing just zigzags, zigzags, it will do this. If it just does this zigzag and it gets tighter and tighter and tighter, let's say this thing gets tight, so tight that it just stays really close to 350. That's the equilibrium. And one moment, a feather will drop on it and it will decide bye-bye, go down, or bye-bye, go up. And that's what we're waiting for. All right. So we are looking for that thing too. Moderna also follows into this category, right? If you look at Moderna, everyone, wrote it off for dead after COVID. All the people that just held onto Moderna after COVID just held, and it just kept going down, making new lows. Here we have a range. Let me turn off these volume things here. We've been in pretty much a range from January, of 2025 all the way up until now, and we broke out of this range. All right. So 1 year it took to make this range. And now we're waiting to see if this is confirmed. If we don't fall back in, we're fine. If this thing does fall back in, guess what? This is a failed upthrust. A failed upthrust can lead to very dangerous things. That means this thing can go down a lot lower. All right. But if it holds, cool. Maybe we can go from $40 back to $200. That's a good price, right? To get. So that's what we're looking for. All right. Okay, that's good. About 56 minutes here. Very nice. Okay, let me read some articles for you. So we're done with that. Okay, and then let's see if I can I'll discuss some of the boomer stocks after I'm done reading those articles. Okay. Let me discuss a little bit about the MSTR a little bit. So MSTR right now, since yesterday, we completed a 9 count here. So I did short this today. So I did a little day trade Will this thing go back down and with Bitcoin? So if Bitcoin really does fall back to 60, so remember I told you, Bitcoin will try to make an attempt again at the bottom of the range at 60, probably is going to happen. So if we look at the Bitcoin chart, so it's going to be a retest. So far, okay, 68, all right. So let me get the 40-minute chart, 40-minute, using 40-minute chart here. So I'm using a fractal of 6. That's why I have 40 minutes for this one. And we'll discuss that some other time. I don't want to digress into that. Digress, whatever. So this one has hit a target here of 65, and it's made a bounce. It's going to complete an upswing to 9 probably overnight. Now, if it fails to hold 69 and rolls back over, okay, into Thursday, Friday, then expect that drop to go into the 3-day weekend at 60. Now, that means it's going to be tough for some people because you're going to have to decide whether you want to go long before a big weekend with MSTR, which is dangerous. But you guys who trade on the exchanges like Coinbase, whatever, you can go ahead and attempt this. So let's say over the weekend it goes down to 60 at some point. You can attempt a long there. So if it cuts into 60 or below it, 58K, whatever, try a long, because that would be a good entry in case it goes back up to 80,000, because that's what's going to happen. If it bounces again from the bottom of that range at 60 or lower, it makes a high volume bounce, just like it did back in February 5th last week, then that will be a good place to attempt one, because yeah, the target is an 80. We still have that target potential. So going from 60 to 80, and you can, if you're trading crypto, you can leverage it up and you can make a bunch of money, I guess, over the 3-day weekend if you're bored, right? I probably cannot do crap with it because I can only go long and short with MSTR. I am not willing to gamble over a 3-day weekend without being able to trade MSTR, so I can't do that. But whoever wants to try that, you can try that, because I think that's really there's a good shot that will happen. All right. And we have like Chinese New Year's for the whole week. So the Chinese market is closed. So there's probably going to be a lot of people bored over a whole week over in Asia. And, even though crypto is technically banned there, crypto mining, of course, they'll still trade. They'll go to the Hong Kong exchanges and trade crypto because Hong Kong does not close the whole week. And, there's other ways to trade. I'm sure people know how to do that in China. So this one has a 1 count starting. We completed a 9 and 13. So in our 240-minute chart, we also have a 80. So both 40 and 240 agree that 80K is the next target if this holds. All right. So this is what you're going to have to hopefully see. Now, it could just go up here. It could, right? It could recover into tomorrow and it'll be fine. But in case it doesn't, and it makes another leg down, another 1, 2, 3, 4, 5, 6, 7, 8, 9 into Friday, Saturday, and then on Sunday it bounces, okay, then that's where I would just suggest that you want to go long if that's what you want to do for a trade. So if you're bored, that's what I recommend to do. All right, let's read some articles. All right. BASF and Corteva. So we're talking about seeds and what? Pesticides, right? Yeah. So BASF, the large German chemical company, and Corteva, one of the large agribusiness companies, signal a new era of restructuring in global agribusiness, written January 15th of this year. Change has become the defining constant for global agribusiness. particularly among the industry's largest and most influential companies. That was a central theme in a recent episode of the Agribusiness Global Report, where Bob Trogele, oh my God, what is this? Bob Trogele, the CEO of Pro Ag Invest, joined the program to unpack why restructuring, divestments, and potential spinouts are accelerating and what it all means for agriculture moving forward. Trogele, who brings more than 35 years of leadership experience across the agribusiness sector, framed today's environment as the result of converging macroeconomic, regulatory, and geopolitical pressures. Since COVID, over the last 5 years, changes are constant, he said. That's what we should expect as the industry adapts to a new macro environment for agriculture and a shifting business climate, depending on the country. One of the clearest examples of this transformation is BASF, long known for its fully integrated chemical and agricultural operations. BASF has begun reassessing that strategy. According to Trogele, the company's German base has created mounting challenges, particularly around regulation and energy costs. Regulation and energy are the two main issues, he explained. Energy prices have gone through the roof, and the costs have gone through the roof. Europe's climate policies and Germany's historical reliance on Russian gas and oil have compounded the situation, forcing BASF to make difficult decisions. As a result, the company has been divesting some assets and is now exploring initial public offering for its agricultural business. That places the ag unit into a separate company where BASF will remain an investor but will also attract other investors to come in. While BASF ag business is widely regarded as strong and well managed, Trogele noted that separation is no simple task. It takes a couple of years to decouple all the systems of an integrated multi-billion-dollar organization, he said, pointing to the complexity of disentangling shared services, contracts, governance structures, and operational sites. Still, he remains optimistic, adding, "I would bet that they'll be highly successful when they get there." So that's good. There's a new stock coming into the market. Yes. Yes. This is what happened with GE when they start splitting off all their companies. All their stock prices went up. Delicious. Okay? This is good. This means we have lots more tickers to pick and choose from. Corteva presents a very different restructuring story. Born out of the Dow Chemical and DuPont merger, Corteva has spent much of the last decade navigating regulatory scrutiny, integration challenges, and pandemic-related disruptions. Under CEO Chuck Magro, the company has taken decisive strategic steps, including major acquisitions such as the $1.1 to $1.2 billion purchase of Stoller to build out its biologicals platform. Today, Corteva operates across three primary platforms: seed, chemicals, and biologicals. The seed platform, the traditional pioneer business, is doing extremely well, Trogele said. The chemical business, however, faces tighter margins and intense competition, while biologicals remain firmly in growth mode. Corteva's reported plan to separate parts of its business reflects an effort to sharpen focus and unlock shareholder value. So another one itching the split. So Corteva had like earnings a couple days ago, I believe, and they are going to split off their companies. So we have another one that might split up. All right, let's see. What's the comment? I might be willing to do some bish work since doing is the best way to learn. We'll see how busy I am a couple months. Yeah, I want Garian to start working on this. I want other people. First off, though, we need to have structure, a plan, and then start working on it. So there'll be a lot of people interested in doing this for sure. And yes, that's the best way to learn, is to do. Yes. So once I have a plan set up with the boomer portfolio is the first plan. Getting a boomer portfolio to outperform consistently, step 1. Step 2, getting it to outperform hedge funds and mutual funds and other ETFs. Those will be step 2. Once you get step 2, we take what we learn from that and apply it into an algorithm to do trading. Step 3, basically. So once we get AI to do that, done. You're done then. We're done. Yay, we're all going to be rich. That's step 4, right? Yeah, hopefully. I don't know. Anyway. Okay, let's go back here. They decide to separate out the seed, which is their core profitability driver, from the chemical business, which is more competitive and lower margin, Trogelay explained. One unresolved question is where biologicals will ultimately land. For me, the big question is what happens to that biological piece, he said. I've heard it may go with the chemical business, which is a very interesting play. From a grower's perspective, these changes raise important considerations. Farmers increasingly want integrated solutions that combine seed, chemicals, and nutritionals and biologicals. Growers are looking for more integrated solutions. So that's why Monsanto got bought up by Bayer and all this stuff. So there's a lot of people that are going into these multi-corporations, multinational corporations to do seeds and pesticides, all kinds of stuff. Right, this is big business, okay? You got to feed those billions of mouths. You got to feed that third world, baby. They want a full offering brought to them. Corteva, he noted, has historically excelled at delivering strong technology across all those areas. They're giving some of that up to extract shareholder value. Zooming out, Trogelay sees these moves as part of a broader trend among top-tier agribusiness. Whether through IPOs, spin-outs, or portfolio reshaping, companies are seeking greater flexibility, access to capital, and stronger returns for investors. This is a trend by the bigger companies to attract more shareholders, raise capital in the future, and build shareholder value. As global agriculture continues to adapt to economic uncertainty, regulatory pressure, and evolving grower needs, the strategies of industry leaders like BASF and Corteva may offer a preview of what's ahead. For Trogelay, the one thing is clear: change isn't slowing down, it's becoming the new normal. All right. Let's go, baby. Let's go. All right. One other article here, which is funny. I think this was a funny one. Chipotle CEO is telling people, hey, you brokies need to make 100,000 if you want to eat our overpriced burritos. So restaurant chain to raise prices, lean into customers who make at least 100,000. A national restaurant chain is planning to raise prices after its CEO said he wants to lean into customers who make at least $100,000 a year. Chipotle Mexican Grill's interim CEO Scott Boatwright said during an earnings call last week that the company wants to increase foot traffic and revenue by focusing on a higher earning demographic, according to Business Insider. What we've learned is the guest skews younger, a little higher income, is typically a digital native, and that their grounded purpose aligns with our North Star as a brand around clean food, clean ingredients, high protein, Boatwright said. We are the way they want to eat, and we're going to lean into that in the most meaningful way. We learned that 60% of our core users are over $100,000 a year in income, in average household income. That gives us confidence that we can lean into that group in a more meaningful way to really drive meaningful transaction performance in the year. The median household income in the U.S. was $83,730 in 2024. According to the U.S. Census Bureau. The median annual income for an individual full-time worker was $62,608 in 2025, according to the U.S. Bureau of Labor Statistics. The New York Post reports Chipotle Chief Financial Officer Adam Reimer said during the same call that menu prices will increase 1 to 2% in the coming year. A rep for Chipotle said the price hike was separate from Boatwright's comment on higher income customers, according to Fox Business. Damn it, brokies! Get richer so you can overpay for our burritos. Come on. Oh, man. I haven't been to a Chipotle in a long ass time. I used to eat that a lot when I was... I don't think Chipotle was when I was in high school. No, they're definitely not. So it must have been... like later in college, so probably grad school. I started eating there a lot for convenience sake, because if you live in a college town or then you go to work and you just live on an office campus, there's not many choices. So unless you pack your own lunch, that's where I would eat. So because they used to dump a ton of meat into like your bowl, so you could just order the damn bowl and they would just dump a ton of meat. I bet you they don't do it now. I bet you they're told by their managers, yo, stop putting so much meat into that bowl, all right? Yeah, probably. So it's probably not a good deal, but before it was a good deal. Yeah, it was pretty. So even though it was for sure overpriced, you could go to any taco truck. Like when I lived in like the city, right? So San Francisco is easy. You just go anywhere. You had taco trucks. You got like any taqueria was available. They were open at all hours. You could go in the morning. You could get any fucking taco you wanted, right off the bat. But yeah, depending on the location, that wasn't possible. Probably nowadays there's a lot more taco trucks that drive to offices, so they'll actually go and seek out big office centers to just park their truck. They'll just tell the manager, hey, yo, can I park my truck here for lunch? I'll pay you a little bit, and most small companies are cool with that. I don't know if a big company like Google or Microsoft are cool with that kind of shit happening. But definitely small company. I used to work in small companies. They would invite taco trucks, like any kind of food truck to come through. Yeah. So, and sometimes they would pay for everyone's lunch too, if the CEO was feeling generous. If we were doing good that year, oh yeah, it was a good year for us. Yeah, they would just treat us. Yeah, here's an ice cream truck, taco truck, whatever. So yeah, ate that at school. I think it was always a popular thing at school, but it's overpriced, Anyway, you can read the rest of this thing yourself in the link. So this is the Boomer ETF I'm building. All right. So we're getting some here. I also added this one, 2 risky stocks. Today, this thing went up like 30%. I don't know why. It must have been some news. Holy crap, dude. Yeah, almost 30%, 26 something. Oh my god. So this is great. We got some good ones here to pick out. So I am going to go through how I come up with this thing, and that will be in my Substack. Okay, and I'll go through each one and show why I picked that. But for now, you can just take a screenshot here. Okay, just take your screenshot. So I'm going to do a year-to-date gain right now, and just take your screenshot. You have the size of the company, market cap to your right. You have the rate of change here from the beginning of the year. Okay, you have the industry label. Now the foreign ones won't have it listed like this one. Some of the foreign ones. So TKAMY, ThyssenKrupp is a German steel company. So you remember I was highly bullish on steel. So this one actually outperforms so far this year a lot of US steel, but US steel is more stable. Okay, so the charts look more stable, like Nucor, NUE, and what's the other one? Steel Dynamics, STLD. I have one copper because this is the biggest copper manufacturer, FCX. And then I'll start adding ALB for the lithium. So that one does lithium as well as mine other materials. So if that one has earnings right now, if that one does well tomorrow, then I'll add that one, ALB. But for the most part, we have one fertilizer. All right, here, ADM, Arthur Daniels Midland. Okay, up 20% so far. So these are the ones to get. Mexican cement. So it was going down after earnings last couple weeks, but is recovering. So I added that one, and some other things here that might do well. Like I'm not a big fan of airline companies, but if you had to pick one airline company, I was like, get United. All right, just throw one United in there. Fine, I'll use that one. And I have one cruise line. Okay, Royal Caribbean. This is the one Jeremy supposedly applied for to be a deckhand or whatever. So Royal Caribbean is one of the only cruise companies I would say that has done very well since COVID started. So after it's crashed during COVID and when we had reopening, it has a very nice chart. It's about to touch 360 again. If it gets into 360 and breaks out, we are going to resume a new trend in Royal Caribbean. But everything is about oil and gas. So MPC, Marathon Petroleum Corporation. We have PSX, Phillips 66. You have CVX, Chevron. You also have Exxon. We just talked about that one, XOM. And I added one nuclear, GEV, GE Vernova. Okay, so if nuclear does well, we should have results for CCJ, Cameco Corporation Friday morning. If that one does well, that's a major uranium miner. Then I think that should be doing good too. Then we'll get into uranium mining. But for now, I'm only interested in nuclear energy supply and manufacturing of the nuclear plants. Then GEV is where we want to be. Okay, so servicing and manufacturing of nuclear plants, and VRT is the one that's been leading the market today, and that's what probably kept the NASDAQ from crashing. So VRT is the one to look at. I wouldn't buy it now though after it popped. Same thing with ESOA, but if these two go fine the next 2 weeks, then yeah, I'll be telling you where I would buy, okay, those two stocks. But a lot of these have already reported earnings way back when, so they're probably okay to buy. AstraZeneca, one biotech. I'll add Moderna if it does well tomorrow. We also have I think I added two South American banks. Banco de Chile, BCH, very good. A lot better than some US banks actually performing. Did I put the other one in there? Did I put the other one in there? Maybe I didn't. I didn't put the other one in there yet. There was another one, so I might add that later. Okay. For now, I got Banco de Chile. Yeah, I'll make a note of that. I think there was another one I saw. Okay, South America. Okay. Yeah, South America is going to be very interesting, I think, in the coming years. So any emerging market stock I'm going to be eyeing. If I see something that's really doing well, like cement in Mexico and a Chilean bank, I'm going for it. All right. We have some transportation stock here. GBHT, I added that. JBHT, I mean. And a WMB, another pipeline stock. Okay, so we have natural gas pipeline on that one. And then we have solar batteries, solar cell infrastructure, so with batteries. So lithium ion batteries will be important no matter what, I guess. So I think if ENPH actually holds, then yeah, this one will be a good one to hold as well. So this is a mid-cap stock, I believe. Yeah, mid-cap. Okay, so we'll go over these one by one later. And with the stock charts, yeah, you can watch them like this. So I can quickly just go through, like, this is how the boomers do it. They just go every weekend. They just pull up charts and start staring at them like this. They go like, oh, okay, was this one good? Yeah, sure. Buy. So you can do it like that, I'm lazy. I just go like buy oil U. It's like just leverage ETF. Just buy the leverage ETF. Why am I doing this? But let's go. If I don't want to cheat, then that's how I'll do it. And then we have the candle glance. You can do this. So this is a quicker way of looking at all of them pretty quickly. So that's why I use stock charts. It has these nice little features you have here. So yeah. Otherwise, I wouldn't use it. It's only like $150 a year to subscribe, so I don't care. $150 is nothing. Anyhow, let's look at the relative rotation graph. Okay, so that's a relative rotation graph, and this thing tells you the relative strength compared to the S&P 500. And what I told you is when you use this thing, you want to look at the right-hand side. So this thing should be cycling around the right-hand side. So you should see swirling here, but you should see it try to stay in the right-hand side, okay? If it starts just rotating around the whole thing, no, that's no good. All right, so let's look at one example here. Let's look at Aher. I don't know how to pronounce this one. I never figured out how to pronounce this company. Aher. I never listened to an earnings call for this guy either, so I don't know. you can see it's trying to stay on the right-hand side so far the past several months. So does that mean it's going to break out? Does that mean it's going to break out? I don't know. I'm going to keep it in mind. Let's look at the aluminum one, you see. So it got to the right-hand side. It's curving around. Is this going to stay in the right-hand side? We'll see. We'll keep an eye on this one too. Let's see what other ones we have. Cement definitely is trying to keep in the right-hand side. So you see this? When you see this, this is what you want to see. This means there's a trend. That means this is good. This is a good stock to buy because it's stable. You see that? Over the long term. So that's why it's on the list. Now look at United Airlines. It's trying to stay on the right-hand side, but I'm skeptical. I think it's going to fall out of it. How about GEV? So yeah, for the most part, it is trying to stay on the right-hand side. So that one's good. So this is another way to pick stocks. Okay, you look at the performance, you look at that. So there are many things you have to look at, many facets, and that's how I construct my portfolio. So I lay it out step by step. Do this step, do this step, do this step, do this step. If I set this out, I tell AI to do the same thing. Then I let AI do this thing for me. Then I don't need to do this anymore. Right? There we go. Yeah, you did notice that, huh? It looks like a phase space diagram in physics. Yeah, it does. It does. You know, there in electrical engineering they have those Smith charts too, right? yeah. It's so I don't know if you want to say this is a vector. It is like, oh, okay. I don't want to go too deeply into that. But the guy who made this system is called. He's named Julius de Kempenaar, and you could probably think of it like that. Yeah, maybe there's a lot of similarities to this thing. Here's the oil pipeline. So this one, no. You see, I mean, not the oil and natural gas pipeline. You see this one, no. You see, it's not really there yet. All right, so there's a lot of these ones that we have to reconsider probably down the line if we want to keep them in the list or not. So let me get back to the summary. So like this one, right? This one is not staying on the right-hand side. Will it stay on the right-hand side though? So first off, let's look at a long term. Let me do 2-year chart. How about that? So since probably 2024, it's gone sideways. So let me do 10-year. How does it look 10-year? So most of its move up recently was between April of 2023 into October 2024. But from then on, it went sideways. And only recently is kind of breaking out, right? So this is the thing we have to look at. Now, the other thing too is this top part is relative, the relative chart between WMB and the S&P 500. Only since September of 2024, it's kind of outperformed the S&P 500, but then it started underperforming last year. Now it's trying to get back up again. So that's why you see it like not really confidently going on the right-hand side. It's not showing consistent strength over the months, right? Over the weeks, let's say. So let's look at another one. All right, what's the other one that looked okay, right? CMEX. If you look at CMEX, there's a different story, right? You see the top part. So when compared to the S&P 500, it's consistently going sideways up, sideways up, sideways up. It's not like it's going down like crazy like WMB. Okay, so when we look at the 10-year chart here, it's zigzagging, right? And then we go back to the CMEX and we look at the 10-year chart. Let's see how it is, right? For the most part, it has been going up and down until 2025, when after April, it started moving up. So let's zoom in. And you see now it's been consistently going up, beating the S&P 500. So after earnings, you see that it went down, right? It actually went down into earnings. So let me get this here. Let me zoom in. Let's do a 5-day chart. Okay, no, 60-minute. How about 60-minute? You see that? So it went down, like going into earnings. It had earnings, it popped, it went down lower, but now it's recovered. So I like that. I like that. Somebody has been buying up at 11 and pushed it back up to 13. So I think this is going to continue its trend. All right. So hopefully that gives you some idea. Another one that's like that is what was that? Royal Caribbean. Royal Caribbean. Okay. So it definitely had a trend since 2022. It failed the trend kind of, because we should have been going back up above 360 sometime last year, but it didn't. You see, it's kind of like it's undecided. It's going. It really isn't beating the S&P 500 anymore. Like, you know, between 2022 and 2024 November, it was. After that, it got a lot more volatile. It went down here probably after earnings of some sort, tried to bounce, and then it just fell back. Right? I think this was like, oh, this was after April. So yeah, okay, it followed April. That makes sense. It tried to recover. Okay, yeah. So it's a bit more ugly, right? Now, with the recent earnings this week, if this thing can break 360, then yeah, that's a buy. That's a buy. Okay, so that's what you're looking for. You want to look for something like XOM, because Exxon has not been beating the S&P 500. It's been going flat to down since 2022, and now it's perking up. So this one, we gotta watch and see if this thing is gonna go anywhere. Okay, hopefully that answers some of your questions. You know, I don't know. I guess I had some like stupid 4chan things, but probably don't need this. I mean, the reason I saw the whole Chipotle stuff was because of 4chan. So I'm gonna load that up. Since we're here, let me just look at the Chipotle stock. Let's see. Yeah, ugly stock. It hasn't been an interesting stock for a long time. Yeah, look at this thing. Jesus. What the hell? Yeah, it used to be fine after 2018. I did used to have this stock. Like, there was a very good trend after 2018. It was building. You see this thing, though? You see COVID? It went right to the green, 150. Like, it was like, what the fuck? But then after 2021, it's... Nah, this is not interesting anymore. 2023 kind of recovered, but you could have bought any other stock and it would have beat Chipotle. It's really not. So you can see, like, once you see this looks like a huge topping, right? It's gonna go down, man. So a stock like Chipotle, you probably would short this, dude. Like, this thing is gonna go down. Jeez, this is terrible. So yeah, no. If the CEO really is hoping that more people get paid $100,000 a year, good luck. Good luck. I don't think that's happening, bro. I saw some recent tweets about like small companies doing less hiring. There's some layoffs happening everywhere. I think the salary after inflation is the lowest in 6 years or something. So after taking into account your salary with inflation, it's basically the lowest in 6 or 10 years. Yeah. The Chans do have an investment board. It's called Biz, but Biz is stupid. It's just a bunch of Indians going in there shilling some shit coins. It's worthless. Don't bother going there. So it's called Biz. I just go to Poll because it's funny. I don't go there to like actually do serious things. I just go there just to see how stupid everyone is. So it's like, yeah, the working class are being priced out of the burrito bowl market. This is funny. And then, yeah, what the fuck? Yeah, let's see. How does this even work? The economic conditions in America right now can't sustain $40 burritos. Like, look at this. Married and own a home by 30 years old in America. In 1950, 50%. 1960, 52%. 1970, 48%. 1980, 45%. 1990, 43%. 2000, 35%. 2010, 25%. 2025, 12%. Incredible. Yeah, I mean, yeah. Most of 4chan now is just like reposting shit you see on Twitter. It's really pointless. Sometimes there's some funny stuff that people say. What, 39 euro chili burrito? What the hell? Is this what you guys eat in Germany? 39 euros? Oh, man. Burrito meat, chili con carne, Fulung, 40 Struck, 3.2 kilograms a carton. Oh, man. What is this shit? God. Yeah, there's some stuff, man. Oh, is this the Taco Bell CEO? Anyhow. $40 burritos. No, it's inflationary. Yeah, forget it. Just stop buying that stuff. Yeah, stop buying that stuff. Okay, it's 1 hour 30 minutes. We're good. I don't know if I'll do a stream later today. It's gonna be another secret stream. Okay, so please subscribe to my Give Crack to Me channels for the secret streams where I just play copyright stuff. Okay, so I can play movie clips and have better background music. So you can go there. I'll just do that, and I'll start talking about some Boit stuff. So I did make an appearance on Napstar's panel yesterday. So we were talking about Boit and how to model Boit, and maybe I'll talk about how we can use fractals to predict when the Thorps are going to do this or when Dalmatian is going to do that. Blah blah blah. You know, so things of that nature I think are fascinating. So if you want to know stuff like that, how it can apply to trading, because trading is just fractals of a fractal, and it's all human behavior, human systems, and all these systems are governed by, the sun, the moon, everything like that. Also, subscribe to Be Better Network. That's where Universal Jones is putting up his Boit series. So I'll see you there if I do a late night stream today. Otherwise, I'll see you tomorrow. I don't know what's gonna happen. Are we gonna crash? Are we gonna pump? Yeah, we'll see. Let me get the Cisco chart. Cisco Robinhood. Let's see how this one's doing. Oh my God, it's crashing 7%. Is it pulling the semiconductors down with it? Nope. Ignoring it. So, guess nothing. Whatever. Everyone's still happy in semiconductor land then. All right, guys. So, I'll see what will be, but maybe nothing to do tomorrow, at least for day trading. But I did get some trades in for shorting Palantir and MSTR, little small trades, but nothing. The big thing is to follow UwU. UwU is where you want to be. Microsectors, oil and gas exploration and production, 3x leverage, ETN 8%. So 20 to 25% if you got it in when I told you to buy it last Monday. So that's good, right? That's good. A lot of boomers would kill for that kind of gain in a couple weeks. Anyhow, good luck to you guys. We'll see you. So be sure to subscribe to Give Crack to Me on YouTube. All right. And Kick. That's where I am at. That's where I'm going to be. That's where I'm going to do the secret streams. And the link to the previous secret stream is in the description. So I'll see you guys.